Alright, welcome to Make Boss Capital channel. My name is Michael Chu. This is the market recap video for February 21st, 2025. We have a pretty bad week this week. In general, growth stocks are mostly pulling back or even entering correction mode, like more than 10, like even 20% in some cases. So what's bringing this market down? So here's what Copilot gave me some general things that have happened. Obviously, the tariff is still something that could be impacting the future. A lot of uncertainty. Consumer sentiment index fell pretty hard on Friday. It went down to 4.7, much lower than the anticipated level. So that is currently reflecting outlook that is weakening in the economic conditions, especially when it comes to consumers. Also, the U.S. business activity PMI survey data also stalling in that sense. Also not a good number. Corporate earnings, Walmart really took the market down on Thursday. That is lower than expected sales and profit forecast. So again, related to maybe consumer weakening in that sense. And then we have inflation concerns as well. That's happening because of tariff induced price hike. So that's also causing some problems right now. And then we have obviously some major stock news like United Health fell over 7% on Friday after the Department of Justice is probing its medical billing practice. So overall it's been a pretty bad week. So now let's jump to the charts. This is the Nasdaq Composite Index. We've been kind of going sideways action for a while now. You can see it's just having a hard time passing through these new highs. And even this week, like look at like Tuesday, Wednesday, it just couldn't go above it. And then we basically start reversing on Thursday on the index. And then Friday was a really hard sell off. It basically undercut the red line, which is the 50 days moving average. So that's not a good signal. We have undercut it before. Generally, it does bounce back within a couple of days. So let's see how this plays out. So basically, the more time you test it, the higher chance it will fail, right? Because the buyers come back in here, support, 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 but eventually the buyers are going to dry out, and so it's basically a fight between bulls and bears. There's a high chance this might not work and it could fall all the way back to the black line here, which is the 200 days. We haven't seen that since the last August correction right here. So whether this will turn into a bigger correction, no one really knows. But right now it doesn't look good. We also saw distribution day here, which means pickup in volume on the selling day. So that's also happening. On the S&P, very similar action. It did break out to new high, but then again it got reversed after that Thursday, and then Friday we have this huge drop. Now we're back to the red line, so it hasn't undercut it, but we'll see how whether it finds support. So this one was able to bounce back usually within 1 day, so at least recently. So that's another thing to watch out. Now Friday was a quadruple witching day, so volume is super high. Whether this is the last of the selling, again, very hard to say. So looking at the Nasdaq equal weight, we are also seeing a recent breakout, but also fell. Again, this fell breakout is so far a little bit concerning, even though the pullback is still orderly. It's at the 21-day moving average. We'll see how this continues. We do have 2 higher days of volume selling. But yeah, again, Friday is a huge, pretty bad damage to most of the index chart, but this one is still at a 21-day. Yeah, so it could come back to 50-day and test that as well. On the equal weight S&P, this one tried to break out but couldn't. So that's also another failed breakout, and now it's sitting at the 10-day moving average, the 50-day moving average red line, which is sloping down. So that's also not a good sign. Basically, the momentum is really weakening, and at least for the 50-day moving average. So this is also not a good sign. If you look at the volume bars here, it seems to be more red bars than blue bars, and all that is higher. And then the blue bars are pretty low in terms of volume. So that's also not a good sign. So this momentum could really shift negative if this continues. So here's we have the Dow chart index again, finding a lot of resistance at this highs here, just couldn't go higher. and basically it just broke it about this consolidation here. So this is starting to turn negative, and that could happen, to some of the other index as well. So that's why the Dow is definitely a weaker one. You can see the relative strength already been going down for a few weeks now because it just couldn't go higher. And now we have a 10-day slope that is 45-degree angle, so that's not good as well. So yeah, we'll see. If it does come down more, we'll see if we find support at those two lower levels here. And then we also have the 200-day coming up, so that could also be related to this level as well. So we'll see. This is a very high likely chance it could go down to this level here to test it. Yeah, part of the big sell-off on Dow was kind of related to the United Health news, where the Justice Department is probing into the medical practice and stuff. Yeah. So here's the Russell 2000, the weakest index out of all the major index. It's very weak. We try to go above this red line. It just doesn't have the power, and finally it gave up, hit all these lows, and went below that low. And once it went below that low, it just fell all the way straight down to the 200-day. So this is also like telling us that the market is really scary because it can fall hard really fast. So that's one thing. The other thing about this chart is obviously we're seeing a lot of support in the past at the 200-day. Every time it really never stayed there more than a day. You see, and most of the time it even bounced right away. So right now we closed that at the 200-day. So the next day, I mean, you could easily undercut it and see how it behaves after that, whether it will find support level after that, after the shakeout, or whether it's just gonna keep falling. Like, it's really hard to say, right? So something to watch out for. But like I said, this level is very important. It will definitely shake out a lot of people if we come down like even 1%. That 1% could turn into 3% just because of panic selling, as it's going to trigger more and more stops. So will be very interesting to see. And because the Russell is kind of almost, not only small cap but also a lot of like speculative stocks are also kind of in this camp. So any type of speculative stocks could really get hurt really fast. So that's something to watch out for as well. If we do undercut this level. So because of the distribution days on Friday, IBD actually cutting their exposure to 40 to 60%, so it's kind of in the mid range. So basically, they recommend selling your weakest holdings first and stuff, like if you haven't done so already. So that's something to be cautious about. Really, the story of the week is just consumer fears is starting to hit the market. Walmart, as we mentioned earlier, it's not the best. And then Michigan consumer sentiment, the PMI reading also came in below forecast. Next week we have more earnings news, like Nvidia will be the big one. We have Berkshire Hathaway today on Saturday, I believe they come out. We have consumer confidence numbers again on Tuesday, so this one will also again be very important. Durable good orders on Thursday. We have home sales data on Wednesday, Thursday, and then we have personal consumption expenditure coming on Friday. So this one is the PCE number. So that could be very important, 2.5% year over year, and core will be 2.6%. And then again, other earnings news, we have Home Depot, Salesforce, Duolingo, Exxon, Kawa, CRM, Salesforce, Snowflake. So lots of earnings to still be reported. So that is still going. So after Friday's drop, it's very interesting that the yield is also dropping, which is very interesting. Basically, I mean, after the consumer numbers that are so weak, like the market now is trying to price in more cuts this year, like from 2 to 3, something like that. So that also causes this yield kind of not so much inflation fear, but more on the economic fear, right? So that's why it's kind of turning down now. So it's kind of reacting slightly different now. So very interesting. And the US dollar, kind of continue to weaken, hitting new low again this week. So very interesting. This is starting to weaken quite a bit. The downtrend line is getting more clear now. It's starting to look, it's starting to look more obvious, and we undercut it. So we could, if the economic news starting to look more bad shape, this could bring the dollar down further. So the one area that is kind of still showing strength is the gold. Is the price, I think, is 29.40 on Friday, which is really close to 3,000. It's staying really near the high. Now on the stock side, I didn't see the power of the gold stocks this week. Like even though the price is stable, a lot of them have corrected or pulled back. I mean, pulled back. But the bounce has been weaker than I anticipate. So I don't know if this is anything like what that means, or because if this continue to hit 3,000, the gold stocks might jump, as well again, right? So I don't know. That's it, but anyhow, we are seeing some profit taking right now at some of the gold shares. So I just want to mention that US oil on the oil side continue to weaken as well as US dollar weaken. This also tend to weaken. So we are also testing the lows here, just like the dollar. So very interesting. So in terms of the advanced decline line right here on New York Stock Exchange, this is from the IBD newspaper. It is kind of starting to come back to the lows again. So that's not a good sign. So if it, hopefully, like Friday, hopefully that was the last of the selling. But if the selling continues, then we'll probably for sure, break this low here, recent low. And there was a 3-to-1 ratio, 500 to 1700 ratio on terms of winners versus losers on Friday. And then on the Nasdaq side, it's 800 to 2700. So that's also very significant. And again, this one is almost at new lows right now. So again, it's already come back so fast, right? Like from here to here, even though the index has climbed for quite a while, but it really has make no progress in terms of the advanced decline line. So really, the market is not broadening. I don't feel like it's broadening at all. It's actually narrowing quite a bit, and this is showing now on this chart for sure. Again, in terms of the IBD signal, they have shift from Tuesday to Wednesday. Thursday. This is Thursday. It has a distribution day, and then on Friday another distribution day. So we went from 80 to 100% allocation now to 40 to 60% allocation. That's what they recommend. And on the stocks accumulation distribution side, we can see it also shifted. There's way more distribution now. It hit over 500, almost 600 by Friday, based on the stocks that I monitor. And then industry groups, you can see there's also more groups being sold off as well. So there's still some buying, obviously. You can see that accumulation there. But on the net accumulation distribution by sector, we are seeing negatives all across the board on all the sectors here, from tech to financials. So this is looking very negative as well. There's really, again, there's some being bought, but there's more being sold, right? So and these are based on higher volume. So yeah, so there's really not one sector even stand this pullback so far. So that's why it could turn more ugly, is what I'm trying to say. The other secondary indicator I always look at is the put call ratio on the Nasdaq. Typically, when the puts are being bought, they usually, especially when it climb above the one ratio, it tends to be signify a near-term bottom, just because so many people are buying puts. They have shift from bullish to bearish, and they usually, the switch usually take some time. So by the time they actually switch, it's usually too late. And right now, we just haven't seen any put buying lately. Everyone is still kind of. I know the CN fear index is still near fear level, but still, but it's not showing on the options market. So that is a secondary indicator. It can be not 100% accurate, but generally, when there's more fear, you want to see some puts in place, but we're not seeing that right now in this week. So that's very interesting. Now, Friday's data might not be included here, so just want to mention that. But anyhow, but just in general, it's just not showing much fear at all this week. So SMH ETF semiconductor group here, they were doing really well. You can see from the chart here, this whole week was doing really well. It was moving up really slow, but it's nonetheless moving up. But here's the problem. The problem is Friday. Not only is sold off on higher volume, but one of the things is the velocity, right? Like basically, it took 3 days to go up this week, but it took one day to not only undercut it undercut it by a lot. So let's look at the intraday chart here. So here's the 3 days up, right? And look at how fast it just undercut all 3 days. Within the first 2 hours of the day on Friday, it already undercut it. And obviously we see some bounce right here as it undercut it. It wants to test that, but it obviously fell really quick, and then it went down for even more, right? And now we are undercutting like previous 5 days lows here, coming back to the 5 day ago, like 5 days ago. So it's again, even this bounce at near the end of the day is so weak, right? Like there's no one wants to come in and buy. Obviously, it's the weekend. People don't want to take extra risk. But let's see how Monday goes. I do anticipate, a small bounce again. Like the market doesn't go straight down, so that's something. That's why it's so hard to look at the trend, right? Like it's always easier to say after it happened, but maybe even gap up a little bit. But that's the thing. If it gaps up, I'm actually not happy about that because that usually is a trap, right? Especially in a downtrend. So we gotta be very careful of that. Anyhow, the semiconductor area is just not really. I mean, I know it's only one day, so maybe it's not that bad. So let's see. It has come back up quite a bit, and really creeping up slowly. So maybe maybe it has already turned. It just takes some time, right? So it could resume this uptrend like this, right? For example. So it's possible. And then Nvidia is reporting this week, so that could really also change the outlook for the market, right? So again, right now it's pulling back slightly. It's not that bad. It has come back a lot, so that's one good thing. We are in the upper range of the base here, so that's really good as well. Now, even though I said all that, it's possible to be more positive, meaning like more optimistic, but again, we have to be cautious here. If Nvidia misses, it could easily go the other way, right? Another thing I want to mention is how the last two earnings report, it did not do much. It wasn't like what it used to be, where there's a huge gap up, breakout, like right here. Uh, so so that's two earnings at the same time. Now, after this DeepSeek news, it's really hard to gauge. Are there more investors, especially willing to invest in AI, and are companies willing to invest in AI, or is there less? And even if they invest more, does that mean like more money, more capital, or they're just trying to invest more in terms of like how they try to compete in the sense of like a deep seek model, like trying to replicate that or something? I have no idea, but I do see a lot of articles talking about like how Nvidia demand has risen because of that news. I don't know if it's really true because it doesn't really state any numbers or any facts. It's just more of a just a, I don't know, opinion to me. So, but anyhow, um, so those are things to consider. But I do think like this will definitely move the market, especially in this current condition. The market is so volatile. If this misses in some ways, especially guidance, that could really bring a lot of tech stocks down further. So that's something to be cautious about. And in my growth stocks video, I'm gonna go through a whole bunch of stocks and really show how fast the stocks are coming down right now, despite most of them not even related to like its own earning news, right? It's just because the market conditions have worsened and they're just coming down really hard. But of course, the ones that are falling also hard are also because of their own earnings and stuff. But anyhow, with that being said, like I said, this volatile market is not a good condition for a growth stock investor, just because you could get hit much harder than you can make. So TSM is another mega cap tech chip stock that is kind of really not going anywhere as well. So this one looks a little bit worse than Nvidia because it's not even in an uptrend right now. It's still in a downtrend. So obviously this could also, because this is Taiwan related, like there might be more tariff news that could affect this stock. So definitely more risk on this one. Avago, very similar trend like TSM. Oh, this one broke the 50-day now. So again, last time it broke it, it was able to come back up pretty fast. So again, these are the biggest stocks. So we'll see how this one go forward here. ARM, very similar pattern. You can see it also on a downtrend. This one's coming down to the red line. Actually went below it. So here's the 200-day support. Again, this one has come under it a few times now. So this looks like there's another level here, right there. So we'll see how this performs going forward. Going to the software group, it was doing nicely last week, and it even like was right there. And then Monday it broke out, but it reversed after. I mean Tuesday it broke out and then reversed after that. So this is very similar to the IBD 50 chart where it just dropped really hard. Volume is also really high, and again, look at how fast it came down. Like it's already now at the lows. That's some incredible speed how fast it comes down. That's the thing that. So what I'm trying to say is there's a lot of abnormal behavior happening right now, and based on like say IBD O'Neill, William O'Neill founder, and also like let's say like Mark Minervini's books, they talk about abnormal behavior. When you see that in the marketplace, it's not a good sign for the market. Those usually is signifying news that you might not even anticipate yet. Who knows what's going to come out in the next few weeks. But anyhow, so that's also not a good sign. Let's jump to the mega cap software group here. We have Microsoft. This one looks really ugly in my opinion. Like it's actually like a L-shaped pattern right now. So L-shaped pattern is where it dropped really hard and then it tried to go sideways as the 10-day comes down. And right now it's sitting near the 10 and 21 day right now. So, but then it got rejected, right? On Friday, it got rejected and now it's sitting near the lows again. So that's how, L-shaped patterns are very dangerous because it can go like a stair step type of pattern like this. And those are very dangerous type of patterns because it can fall really hard on those steps. Google also look very similar. This is very bearish pattern, right? L-shaped pattern. It's basically where it goes down hard and then goes sideways instead of bouncing back to the 10-day. It just goes sideways. So this is kind of the similar pattern I look for in an uptrend. It goes up really hard, like gap up or something, and then it goes sideways. That's a good pattern because it's not coming back to the 10-day, right? As it rises. This is the opposite. The 10-day is coming down, but this thing is not bouncing back to it. Instead, it's going sideways as the 10-day is catching up. So this is what it looks like. So Meta finally broke this, I don't know, 18-day or something, 19-day trend. I don't know how many days there is uptrend, but it finally broke that, and now it's, on the fourth day down. Again, the speed is quite fast as well. Again, that's the one thing, like I said, the normal behavior is how fast they're coming down. Not only they're coming down, like even in this example, you see how it just undercut the 21-day, like without any like bounce back at all by the end of the day. It just sink further below the moving average, right? That's also a bad sign because if we have another bad day of news or something, this could fall even harder. It could see more panic selling. Basically, what's happening right now is that it's basically like triggering every stop that there is, as it comes down, and no buyers are jumping in to even bid it higher. So that's why this is happening. So it could fall a lot further. Here's Amazon also kind of in a falling type of trend here. Again, look at how fast it's coming down now. It's accelerating, right? Like you can see right now, this is where the closing price is, and this is where the 10-day is. It's starting to accelerate, and it's starting to move away from the 10-day. Of course, usually you will see a bounce back, a technical bounce back to the 10-day. It's possible, but it also could like kind of be exponentially like drop even faster, right? Now, usually that will give some opportunity, at some sort of support level. We do have a few support level here, especially at this previous high right here, which is also the 200 days coming up. So I mean that's a good support level because you have multiple support levels here, right? Next we jump to Apple. Apple looking actually not too bad. The volume is really low on both sides, on both the buy and the sell side. It is kind of wedging, as they call it, wedging upward, meaning like really slowly moving up. Friday it was able to hold like the previous day's price, so this looks a lot better than other charts for sure. So in Friday it did make a kind of like, I mean Thursday it made a new closing high here recently. So it's climbing back up the right side of the bed. So this looks a lot more healthier than other charts. So Tesla is still on this big downtrend line right here. So it fell on breaking out of this trend line a few times now, a couple of times. Here's another one that recently fell. So now it's starting to, the 10-day has caught up again. So now, the 10-day slope looks like this. It could, fall. So now the next test level will be here, previous low. This is the previous high. So, you have to understand this stock has gone up a lot. So for it to come back to the previous high, that's a very significant shakeout. I mean, that's really going to test a lot of people, especially even long term. So right now it's 30% down. Like, it's hard to believe it's already 30% down, but but that's coming from a big gain here. So obviously if you buy in recent weeks, I mean right here, you are already at a loss. Yeah, so again, it's crazy how a $1 trillion market cap stock can move this much, and I mean that's how it is. It's just it's a very growth stock oriented stock. The market cap doesn't really matter in this case because there's just so many traders in the stock. Last big cap stock we'll look at is Netflix here. It was doing really well, but it's starting to show weakness as well this week. So right now it falls on the 21-day. I did have this trade here, took some partial profit. sold it at right there after the big drop right here on higher volume. So that's a sell signal for me. Right now it's pulling back to the 21 day. So again, we are at the 21 day here. If it finds support here, then we'll see a bounce. If we don't find support there, there's a high chance it goes to the 50-day line, which is right here. Thank you for watching this video. Hope you like and subscribe. And pay attention to my next video where I talk about maybe there's some growth stocks still moving. What are the differences between the ones going down and the ones going up? Is it worth the risk to get into them? Thank you.